Good afternoon and welcome to the 20th Annual General Meeting of the company. My name is Neil Cross and I'm the company's chairman. May I introduce my board colleague, Patrick Reeve, who joins me here at Albion Capital's office in London, which is the official place of the AGM as notified in the notice of the meeting. Our fellow directors, Robin Archibald, Marianne Cordero, Modwena Rees-Mogg and Margaret Payne have joined as panelists, and you should be able to see all the board members on the screen. Joining us later will be Will Fraser-Allen, the managing partner of Albion Capital. Now, as indicated in the annual report, this will be my last AGM as chairman and a director of the company, and I'll be retiring at the end of the meeting. I've had the privilege of being chairman of the company since its inception, and it's a great shame that we're unable to have our usual format at this AGM, as it would have been lovely to meet shareholders in person again and to say goodbye. I'm delighted that Robin Archibald is succeeding me, and he'll be an excellent chairman. This year, because of the pandemic, the AGM is being live streamed over the internet to give shareholders the opportunity to take some part in the proceedings, and I understand that about 108 of you are. Given the current government measures in relation to social distancing and public gathering, this meeting is being convened with the minimum necessary attendees, which is 2 directors who are both shareholders, and also a representative of Albion Capital Group, LLP, as company secretary. The quorum for this AGM is 2 members entitled to vote in person or by proxy. This has been met, and therefore I declare the meeting open. Separately, you'll note from Resolution 13, the board is proposing to change the Articles of Association to allow for virtual and hybrid meetings to be held in future if necessary, which will allow continued shareholder engagement. Interestingly, as I've just said, it appears that many more shareholders are participating in live streamed events than has historically been the case for physical meetings. I will be taking live questions shortly, but ahead of that section of the meeting, please may I ask, apologies for my voice, please may I ask that you use the hop-in chat function to send questions through to me. To do this, go to the right side of your screen, click the Slido button, and you'll be able to type your question there. I'd like to take this opportunity to thank shareholders who've already sent their questions and queries through to the chairman email address. We'll be answering a selection of these questions shortly. The board is particularly pleased that we're able to continue engaging with shareholders during these unprecedented times. And I do hope at the end of the AGM, you'll give us any feedback you may have to the same email address. Now, on to the business of the AGM. We're going to start with a short presentation from Will Fraser-Allen, the managing partner of Albion Capital. So I'll hand over to Will.
Neil, thank you very much indeed. And welcome to all the shareholders that are attending in this virtual event we're holding today. And I'm delighted that there are over 100 of you. That's great news. What I propose to do is to run you through a presentation which will look at the results for the year just gone to 31st of December 2020, giving you some of the highlights, but also looking forward and making some comments on the prospects for this company in the days and years ahead. Next slide, please. And an agenda for you, and I'll move straight into the financial highlights, please. We ended the year with net asset value of 69.35p, and you'll recall that follows a significant special dividend of 9p paid in the year, hence why the total dividend in the year was somewhat higher than you would typically expect at 12.95p. In terms of return, total return to date now sits at 185.3p, but the results in this specific year has been somewhat muted, a very small loss. And that, I think, whilst not our target, is understandable given the context of the world that we have been operating in, whereby a pandemic struck us at the end of the first quarter, and all that has come with that. Next slide, please. Talking a little bit more about that impact, we are in a better position now than we were a year ago, and that's because we sort of understand how our portfolio companies have reacted to COVID and what the COVID has done to their trading performance, and all in all, it's pretty good, and we're pleased that the portfolio has stood up well. It was always designed to be an all-weather portfolio. We weren't expecting a pandemic, nobody was, but the methodology and the asset allocation we've used has stood us in good stead. So many of our businesses have not really seen a huge amount of negative impact, albeit growth of the whole portfolio has been somewhat muted as the total return for the year shows. And what we are able to do now is to continue targeting those areas that we see as being more resilient to COVID, but also where we think the opportunity will arise, and I'll talk to that in a bit more detail. But digital health, data analytics, automation, fintech, digital security names many of them. But one outcome of COVID-19 has been these type of presentations that I'm doing today. They like the concept of a virtual presentation, the concept that people dial in over the internet, and what that has given rise to is far better engagement. So we've seen up to 150% increases in those attending, and therefore those that we're able to engage with. So amongst all the gloom and challenges of the year, there has been an uplift in engagement with shareholders, and we were also able to run our fundraising process rather more efficiently because it allowed us to completely do that online. So online application forms, or instead of checks, money is being directly transferred through the banking system, and that led to a far smoother and more efficient and environmentally more friendly way of doing fundraising. Next slide, please. Looking at our track record as we do on a 1, 5, and 10 year basis, I've given you the numbers here to December, which is the annual report we consider at this meeting. But we have also just announced on the RNS our March 21 numbers, which I'll give more detail in a moment, but have seen an uplift. So looking beyond the 12 months, on a 5 year at 33%, or it's now gone up to 37%, or even 10 years with 41%, 42 and 41%, a credible performance over a longer period, albeit muted in the current year. Next slide, please. Picking up some highlights, we had a very, very successful fundraising this year. Across all the Albion VCTs, we raised 58.5 million, of which 15.5 million was for this fund. It was raised in record time, and a huge thank you to the many shareholders, existing and new to us, that participated and supported us. Exits were rather fewer exits this year than last year. We had a particular bumper last year, which gave rise to the special dividend. This year we had two exits, G.Networks and Clear Review, which I have got some slides on in a moment. Investment rate was brisk, and that I think is pleasing because it was challenging suddenly seeing the entire office decamping to remote working, but we were able to continue our very active investment program, and with 6 new companies entering the portfolio and a substantial number of other existing portfolio companies receiving support in the year. Share buybacks were down, no particular reason that we can ascertain, but pleasing that we continue to have the support of many shareholders while still being able to provide a buyback facility for those that need to sell their shares. Next slide, please. Next, can we move to the next slide, please? Looking at the portfolio, it's a very diverse portfolio. 61 companies in it, and I think thinking about why VCTs are around, which is to support many small businesses, and one of the reasons for that is to create jobs. And with 3,200 people now employed across that portfolio, we're very much delivering that ambition of providing new jobs and growing businesses that employ them. Cash is significantly down from this time last year. That reflects the special dividend paid out after all the exits that we had. And you see, as anticipated, as predicted, that we are increasingly seeing a portfolio focused at software and healthcare. And you see got significant growth in our allocation to software and a smaller allocation to healthcare. Renewable energy continues to sit in the portfolio at about 14%. And a smaller allocation to education being R.2 schools and some other business services businesses. Next slide, please. Looking at the portfolio in another way, sort of how is that diversified across stage and size? I look at this in two ways. I look at it in revenues, so those businesses with low revenues tend to be more volatile than the larger ones. Now that has jumped to, i.e. those with revenue less than 1 million to 24%, and that reflects the exits that we've had and the fact that we've made a number of new investments in earlier businesses. So that should come down in time, but still a substantial part of the portfolio in businesses over either 1 million or 5 years. And that's again reflected when you look at the portfolio in terms of the numbers employed by those companies. So with over 100 employees now, some 28%, and a further 20% with companies over 50 employees. Next slide, please. What we are seeing and will continue to see is that there will be a number of businesses that do very well, and therefore their valuation increases over time, becoming a more concentrated part of the portfolio. So this is a new slide this year, which looks at the top 3 investments to give you visibility of what sort of concentration we have in those companies. So total, the top 3 here: Quantexa, which is our data analytics business; Radnor House and School; and Provica, our specialty pharmaceutical business, in aggregate now count for a book value of 16.6 million, and that's against the cost of 6.6 million. So these are businesses that have done well, but that's progress has been reflected in valuation. But in aggregate, those 3 now represent just over 21% of the net asset value of this company. Next slide, please. New investments, busy year. An example would be Concirus. This is a business that provides data to the marine and commercial insurance industry. Lots of data available. By providing decent analysis of that, you allow insurers to better price risk, and it makes a significant difference to their return profiles in terms of their loss rates. Total investment across the VCTs of 5 million, of which this fund contributed 1.6 million, and that funding will be used to build the platform further and help the business grow through sales and marketing activities. Next slide, please. WeGift, a similar story. This is a platform that allows companies to operate reward incentive programs, whether that's for employees or customers. So think of the old gift cards, but this is gift cards in the digital age. So it's providing a company with access to many, literally hundreds of potential reward gift cards, and that might be to incentivize new customers or to reward employees. Again, we invested about 4 million here. It was of which 1 million came from this VCT. Again, looking to build that platform, build the technology, and help them grow the business through enhanced marketing and sales. Next slide, please. But lots of other investments too. Credit Kudos is a digital challenger in the credit bureau space. Transfig provides connectivity for banks to trading venues. Seldom allows enterprises to deploy machine learning models. So this is the very complex models that sit behind a lot of machine learning that's driving automation. And then on the healthcare side, the digital health side, we've made a small investment into UMed, which effectively allows those running clinical trials to have access to patient data, but in a very compliant way. And by doing that, they improve the recruitment of participants in clinical trials. Clearly extremely topical at the moment. Next slide, please. But it's not all about new investments, it's also about follow-ons, and this is an important part of our strategy where we invest in businesses and then we continue to support those businesses over time, and really importantly looking to back our winners, and we do that by funding them as they grow, as they require further capital. So Contexa, Oxentis, Umotive all had decent follow-on rounds which we were able to participate in through this fund. Next slide, please. Turning to exits, the first exit was from our holding in the Albion UK Equity Income Fund. This was a fund that was run by an Albion team. It was focused on UK equity income. It hasn't been a happy story. I'm disappointed to report. Performance has not been good, and COVID-19 and Brexit and the general fall in the UK quoted markets did not help one little bit. Sadly, this has resulted in a £648,000 loss. But the board and we as the manager took the decision that it was time to come out of that investment and to use the proceeds by redeploying them into innovative unquoted growth companies where we see resilient growth and opportunity. Olim has subsequently ceased its operations and plans to transfer to other alternative investment managers. Next slide, please. On a more positive note, we sold our investment in G.Network. Now this was an investment where we backed them at a very early stage. They were putting broadband into streets in London, and you don't have to walk around London very much to come across them digging up the roads at the moment. They are building a very significant network. They only had 2 streets when we started. When we exited, they had passed some 160,000 premises. We did very well out of this. We made 3.8 times our money and total proceeds of just under 18 million. It was unusual though, the structure of the exit, in that we will receive those proceeds in 3 years' time, and that reflected the structure that was put in place by USS, which is a very substantial university superannuation scheme, and Cube, who are a large infrastructure manager. They are both substantial counterparties, so we would expect to receive those proceeds in the normal course of business in just under 3 years' time. Next slide, please. We also sold our investment in Clear Review. This was a very short investment. We only held it for 15 months, and it was a software platform that helped companies appraise their staff. So it was a cloud-based means of managing performance. It proved to be very attractive very quickly to Advanced Computer Software Group, who were looking for an offering in this space. So after 15 months, we delivered 2.1 times return. The IRR was extremely high given the short holding period at 75%. But nice to see exits in what has otherwise been a really quite a tricky year. Next slide, please. Reminder of our investment strategy. We do invest from seed, which is early stage, not quite startup, but relatively low revenues, and we typically invest at Series A, and that's a business that has developed its product. It now knows how to sell it, so they've cracked their go-to-market strategy, and we are putting money in, as I highlighted in the new investment slide, very much around further developing that product, but really importantly, helping them scale through growing sales and marketing activities and building out a top performing team. In certain situations, particularly where we continue to invest in our existing businesses, we will invest at Series B, which is a slightly later stage, i.e. you've now got a very established sales operation. But that isn't the core of the strategy, and indeed the VCT rules very much focus us more at Series A or earlier rather than Series B. But it is backing these trends that we've talked about. Software is so fundamental to every business in the land, and we've seen that to such a huge degree during the COVID pandemic, as people have been forced to work remotely and have had to rely on their IT infrastructures to an enormous extent. And these are in areas like digital security, of which cybersecurity is a subsector. It's in terms of marketing has just completely gone digital to a large extent, and also this whole data proliferation. How do enterprises manage this data that they have? How do they use it to make decisions? And that's become a very core and key theme within our portfolio. Healthcare. We've always believed healthcare is a very long-term and important trend. Healthcare doesn't get simpler; it gets more complicated, and the healthcare system has been very slow to adopt technology. And therein lies our opportunity in digital health, in particular around areas such as running virtual clinical trials, but also the whole area of telehealthcare. You've seen this seismic move to treating people remotely as people have stayed away from hospitals. Whilst that'll reduce as more clinics open up, it is very much our firmly held view that there will still continue to be a considerable amount of telehealthcare going on, because it is more efficient. But we're also interested in specialty pharma, an example being our investment in Provica, and also diagnostic devices generally, such as DISYS. Elsewhere, we're looking at automation. Every business now is looking to be more efficient. COVID has forced people to be more efficient. So looking at technology that can enable greater automation is clearly a key theme. But what we do and will continue to do is to limit our exposure to the consumer, and that has stood us well during the pandemic, because it is certainly consumer-facing businesses that have borne the brunt of it. But we just picking up an award that we received this year. We were voted Venture Capital Fund of the Year 2020 by GP Bullhound at their Investor All Stars event. Very nice to see recognition from our peers. Next slide, please. You won't be surprised to hear that ESG is very much at the core of what we do. We've always had a long-held belief that investing in businesses that have a positive societal and environmental outcome is not only a good thing to do, but it also gives rise to long-term sustainable businesses. By becoming a member of the UN PRI, we're now able to put in a framework to enable us to do this in a very, very measured and very thoughtful way. And we're embedding ESG into our entire process. Next slide, please. And this is a busy slide, but what this is showing is that we are looking at how businesses we invest in are developing their ESG strategy right before we invest in due diligence. But we're also working with those businesses as we sit in the privileged position with board representation to help them develop their ESG strategies. And this is helpful and important, because what that ensures is that when we come up to exit, and we will often be selling these businesses to large corporates with very sophisticated ESG strategies, we can ensure that these companies are well positioned and considered very highly by those acquiring businesses in the context of their ESG targets. Next slide, please. Within Albion, we like to do a lot in terms of charities, and this year has got off to a good start. We've supported 2 charities this year. WizKids, which is providing wheelchairs to young disabled children who wouldn't otherwise be able to access it, usually for reasons of cost. And we're also supporting Generation Genius, which in an area very, very close to our heart, given our investment strategy, which is promoting and encouraging very talented students from backgrounds who wouldn't normally be able to excel in STEM careers. And we've raised about £5,000 in the first quarter. And thank you to those shareholders who supported our initiative, where if shareholders signed up for electronic communications, Albion donated a pound towards our charities. And we do encourage shareholders to sign up for electronic communications. It's from an environmental perspective, it cuts down on the paper waste, but also communicating electronically is just so much more efficient. It means that things don't go astray, and it means that we can communicate more quickly and more regularly. And we also had a spring challenge, looking at ways of how we help the team during this third lockdown. So everybody was set a goal that we had to do a certain amount of exercise over a period of time. And against achieving that goal, we contributed and built up the total contribution to £5,000. Next slide, please. Looking forward, we will continue to focus the portfolio on these long-term growth trends that I've talked about: healthcare, software, particularly around data proliferation. We still have our schools, got 2 schools, so education is important to us, and we continue to have our renewable energy portfolio, which is delivering renewable energy across solar, wind and hydro. Consumer-facing sectors still not being our focus. New slide, please. We don't quite know how COVID-19 is going to impact the economy going forward. What we do know is that we have within our toolset the ability to focus on areas that we think are going to continue to thrive, as I've discussed. We've got some businesses in the portfolio doing very well. Quantexa, Egress, Provica being 3 that I would particularly highlight. They are thriving. COVID-19 has not stopped them growing, and if anything, has enhanced their ability to sell their products and services. New investment activity is very strong. We are seeing lots of deals as we become more specialists in these sectors and become known for that expertise. So we would expect a decent level of new investment activity this year. The first dividend was declared and has now been paid on 30th of June of 1.73p. And the eagle-eyed of you, some of you will have noticed that we have just put out an announcement before this meeting, presenting the NAV for the March quarter, so as of 31 March, which shows a 1.4% uplift. So a good contribution to our 5% target return. Next slide, please. Fraud is an issue. Fraud's an issue generally. The move to everybody being at home hasn't helped in all areas of cybercrime and fraud generally. Where we see it in the context of this fund, and those shareholders who've attended these meetings before will know that we've raised this before, is these boiler room scams. It's where shareholders are run by apparently authentic corporate financials. In reality, they're fraudsters promising huge returns because so-and-so is looking to buy your shares. Please don't get taken in by it. Please ignore it. If you have any concerns, pick up the phone to us or email us. Check anything out that looks odd. Nobody should be contacting you like this. The reason they do it is because they've got some very old shareholder lists. But could everyone be on their guard, because it's very sad when we hear of people ending up parting with reasonable sums of money simply because they've been misled by these pretty awful people. Next slide, please. So I wanted to end on this slide, which is paying tribute to Neil Cross. So Neil, our chairman, reminded everybody that he is standing down at the end of this AGM. But Neil has been such a part of this VCT for so many years, 20 years in fact. He's been a fantastic chair. In his time, during his tenure, we've started with a £14 million fund. It's now nearly a £94 million fund. Over 117p of dividends have been paid out, and in that time delivered a total return of 185p. Neil's been a great chair. He's been a source of wise counsel. his contributions are always so considered, and the challenge so eloquently put, and in a very constructive, helpful way. And this VCT has been very lucky to have Neil as chair. I've been very privileged, alongside the rest of my team, to work with him. We'll certainly miss his wise counsel, but we will very much stay in touch. So Neil, from the Albion team, thank you very much indeed. And I will now pass back to Neil.
Well, thank you very much, Will, particularly for your last remarks, but also for your very clear presentation. As indicated earlier, we have received questions from shareholders, some via the hop-in Slido function. I apologise for my voice, I don't know where it's going today. Some in advance of the AGM to the chairman's email address, and we'll now answer as many questions as time permits. But be assured that all the relevant questions and their corresponding answers will be posted on the Albion website as soon as possible after the meeting. Now, we've actually had 3 questions to do with OLIM. One pointing out that UK equity income is now back to pre-COVID levels, so it appears we sold at the bottom of the market. That's really a comment. Although I'm reminded that actually UK equity income is actually still around 10% below its pre-COVID level. Second one says, Will, please reassure me you will not make future investments in other funds as you did with OLIM. I invest in VCTs to invest in actual businesses, not funds, and I'd be interested in your comments on this. But before you answer that one, the other question on OLIM was, is the board comfortable with the manager's decision to sell OLIM? Has any consideration been given to the less than optimal timing of the sale? So I'm going to ask Will to answer that.
Thank you, Neil. OLIM was not a success, and I firmly stick my hand up to that. The rationale for doing it was made with good intent. It was at a time when income was very difficult to come by, when this fund had cash balances awaiting investment. So it was also designed to be a diversification strategy. What has happened since then is some macro events that clearly did not help, and Brexit was one, COVID being the other, and not particularly good performance from our stock selection there. The other important point to make is that UK income out of these businesses has fallen significantly as a result of COVID. So even the ambition to generate income from it has proved to be rather less than we expected. But to reassure our shareholder who's asked whether we will do this again, he can absolutely be assured it is not my intention to have to diversify outside our core skill set, which is investing in unquoted innovative growth businesses. As to timing, I mean, it's very easy to look at timing with hindsight. The decision was the right one at the time when we made it, which was to come out of the fund and to focus on what we should do.
Thanks very much, Will. Another question also for you concerns G.Network, which was sold for £1.5 million, but the proceeds won't be received for 3 years. Does this company have any security on the deferred element? Why is it all deferred? And what discount rates did the board apply for the risks when considering that deal? Why did we consider it to be a good deal when it was barely above the value attributed to it in the previous year's accounts? So that's again for you, Will.
So the G.Net exit was a very good overall return, 3.8%, as I presented it on the slide in my earlier presentation. It was a good deal in return sense. The structure of the consideration, as I said, was unusual in that it was deferred, but it was the deal on offer. We negotiated it to the best terms we could. The exact structure would be is commercially sensitive, so not one that I can go into too much detail. But what I can assure shareholders, and as the board knows, is we did take legal advice specifically around the recoverability and the structure to ensure the high certainty of recovery of that of that consideration in much less than three years' time. Because it's appropriately valued in the accounts. The fact there's no movement in the year reflects that the consideration recognised to date it was in line with the valuation held last year when we did have visibility of the sale coming up.
Okay, thanks, Will. A question related to G.Network. Did the board retain any clawback from the manager's performance fees for 2021, on which the G.Network deal was a material element in the calculation?
That's a very easy one to answer. There is no performance fee for this fund, so it wasn't. There was nothing for the board to consider there.
Yeah, thank you, Will. Will this be the new format for the AGMs going forward? Well, I hope my successor chairman has a better voice than I have when it comes to do it. I don't know what's gone on today. We do place a high importance on the ability to interact with shareholders, and the AGM is an extremely important part of that. We are going to consider the most appropriate way to hold AGMs in the future, and you'll note that we obviously got that board resolution to give us the flexibility to alter the format. I suspect that it'll be a hybrid format going forward, but it will depend on how the country recovers after the pandemic, any resultant government guidelines in place, as well as the general health and safety of the population. So it's a very general answer, I'm afraid. Let's see if I've got anything else come through. Will subscriptions always fall in value by 10% immediately? What's your answer to that? Will, do you want to answer that? Can't hear you, I'm afraid. Can we unmute Will?
Oh, I got mute. Someone muted me. Right, sorry about that. So this is referring to subscriptions at the point of a top-up offer. So when we are allotting new shares to as part of that top-up offer. What you have is effectively two things going on there. There is the issue costs, which are 2.5%. So that's how we fund all the actual fundraising exercise. So that's part of the drop you see. The other, I don't think it's quite 10%, but we also trade at a 5% discount to NAV. So effectively, we've got a combination of the issue costs, and then that is further increased by the fact that the fund trades at around a 5% discount. So the feature of a VCT.
Thanks very much, Will. And now a question from Charles Skinner, who used to work with me years ago, and he said, what am I going to do next? Well, Charles, I've reached the advanced age of 76. I've got a very active dog. I do a bit of charity work, so I think that's enough to keep me going. Thank you for asking. Are there any other questions? It doesn't look as if there are. So thank you, everybody, for your questions, both in advance and through Hop-in. And I'm now going to proceed with the formal business of the AGM. The notice convening the meeting has been in your hands for the statutory period, and I'll take the notice as read. There have been no questions from shareholders on the AGM resolutions, and so I'll proceed. Patrick and I are the two shareholders present for the AGM, and as such, we're permitted to vote. The rest of the board and any other shareholders will, I'm afraid, be unable to vote as they're not at the place of the meeting. However, you will shortly see that the proxy votes we've received show that a large majority of shareholders has voted in favour of the board's proposed resolutions. I don't intend to read out the proxy votes after every resolution, but they will be shown on the screen as each resolution comes up. The first resolution is to receive and adopt the company's accounts for the year ended 31st of December 2020, together with the strategic report and the reports of the directors and auditors. Those in favour? Thank you. I declare the resolution carried. The second resolution is to approve the Directors' Remuneration Report for the year ended 31st of December 2020. Those in favour? Thank you. I declare the resolution carried. The third resolution is the election of Margaret Payne as a director of the company, and I have pleasure in proposing Margaret for election. Those in favour? Thank you. I declare the resolution carried. The fourth resolution is the re-election of Robin Archibald as a director of the company, and I have pleasure in proposing Robin for re-election. Those in favour? Thank you. I declare the resolution carried. The fifth resolution is the re-election of Mary Ann Cordero as a director of the company, and I have pleasure in proposing Mary Ann for re-election. Those in favour? Thank you. I declare the resolution carried. The sixth resolution is the re-election of Modwena Rees-Mogg as a director of the company, and I have pleasure in proposing Modwena for re-election. Those in favour? Thank you. I declare the resolution carried. The seventh resolution is the re-election of Patrick Reeve as a director of the company, and I have pleasure in proposing Patrick for re-election. Those in favour? Thanking myself, I declare the resolution carried. The eighth resolution is the reappointment of BDO LLP as auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which the accounts are to be laid. Those in favour? Thank you. I declare the resolution carried. The ninth resolution is to authorise the directors to agree the auditor's remuneration. Those in favour? Thank you. I declare the resolution carried. The 10th resolution is to allow the directors to allot shares. Those in favour? Thank you. I declare the resolution carried. The 11th resolution is to be considered as a special resolution that the directors be empowered to disapply preemption rights. Those in favour? Thank you. I declare the resolution carried. The penultimate resolution, which is again being proposed as a special resolution, is to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. Those in favour? Thank you. I declare the resolution carried. And the last item, which I mentioned earlier, and again is being proposed as a special resolution, is to amend the company's Articles of Association to enable it to hold general meetings either wholly or partly by electronic means. Those in favour? Thank you. I declare the resolution carried. Thank you, everybody. That concludes the formal business of the AGM. I would like to thank all shareholders. Who've joined this live streaming of the AGM. As noted earlier, the board welcomes any feedback you may have, which you can do by sending an email to aatgchair@albion.capital, and this will be shown on the screen at the end. And for those of you who are interested in seeing the list of questions and their corresponding answers, these should be available shortly on the Albion Capital website. Additionally, I hope you were able to watch the entire presentation without connection issues. I just apologise for my voice. However, if you would like to watch a recording of the event, a link to the video will shortly be found on the Albion Capital website. And as I'm now officially retired, I would like to thank all my colleagues for their support and friendship over the years, and to wish them well in the future. It's been a great pleasure being involved with this company from its inception, and I'm sure it will continue to do very well in the future. I hope you all stay safe and well. I'm just going to hand over to Patrick to say a few final words.
Neil, thank you. And in addition to Will's thanks, I'd just like to say one or two further words, both on behalf of the board and really importantly, I think, on behalf of the of shareholders. So to thank Neil again for his absolutely brilliant work over many years. When I look back on it, he was actually quite brave to agree to be chairman when we launched this VCT back in 2001. It was our first venture into technology investing, and at a time when the dot-com party was rapidly evolving into the dot-com hangover. And on top of that, he had a string of quite high-profile PLC board appointments. So did he really need the extra exposure? Did he really need the extra worry? Well, possibly it was because after a hugely successful 27 years at 3i, these risks had perhaps become a little bit addictive. And certainly his understanding of the riskier sides of venture capital has been invaluable to us all. He knows that it actually really is not an easy game. It's full of uncertainties, but he also knows that if you're consistent in your principles and consistent in your processes, you can make it work. And his guiding hand as chairman has been fantastic, not least in keeping the manager firmly on our toes. And Neil's skill lies almost in what he doesn't say as in what he does. And when he gives a particular smile and a quizzically raised eyebrow, you think, oh crumbs, what have I done now? And then you think, okay, got it. That's what he doesn't like. And perhaps he's got a point. All right, I better think about that one again. And I can genuinely say that Neil almost is consistently right. So Neil, we will miss you. You've been brilliant. Every chairman brings something unique to the table, and you're absolutely no exception. And neither, I'm delighted to say, is your successor, Robin Archibald, who also brings some really fantastic experience and qualities to the table. Neil, you managed to combine being a constructive critic with being a mentor and indeed a friend. And for that, I will always be thankful. Thank you very much.
Thank you very much. And I think it really is time to close the meeting now. So thank you everybody for participating. And I wish you success and safety in the future. Bye-bye.